Alright, Mumbai has seen a slew of launches of luxury housing projects recently. However, demand for these projects hasn't quite kept up with the supply. Is this pointing to a slowdown in Mumbai's luxury housing segment? Nikhil Sivadas uncovers the stress points that Mumbai's luxury housing market is facing.
Mumbai's skyline has been changing rapidly. Nowadays, it's not unusual to see luxury and super luxury projects dominate the skyline as developers rush to woo the rich Indian investor. One such investor is Ambuj Agrawal of Macquarie. He is on the lookout for a quality luxury housing project to invest in, but he's far from impressed by what's on offer.
The prices have significantly increased and they were more expensive than what I would have liked to invest in for a property of that magnitude of a particular location. Key is investment growth. From current levels, I am not very convinced that I would be able to realize a return which is equal to equity markets.
Sky-high pricing is fast deterring investors and end users like Ambuj from investing in Mumbai's luxury housing market. End users are not ready to pay these prices, while investors prefer markets like Delhi and Bangalore, which offer more space and amenities for lesser costs. Even price appreciation for these units is limited, thanks to their already high prices. Realtors tell NDTV that clients are placing very specific limits on the kind of price points they are happy with.
If they're looking at a 2 BHK, configuration, they're comfortable with, price points between 3 to 4 CR, let's say. And if they're looking at a 3 BHK, max between 4 to, let's say, on the outer surface, 6 crores. Anything above those kind of price points is where we, face a slight challenge.
That's bad news for developers who have been rushing to launch these high-margin luxury projects. In fact, the spate of launches coupled with low absorption has resulted in oversupply in the luxury housing market. The second quarter of 2014 saw only 231 units costing more than 6 crore rupees being absorbed, while a little over 7,000 units remained unsold.
There are a lot of HNIs and NRIs who have those kind of disposable incomes and are okay with those kind of budgets, let's say from 6 crores to let's say even 20 crores. But the question is, what is that number? And that number is very less as compared to the kind of inventory that's available, the kind of price points that are there.
The trouble is that your supply has come in one go. If the supply was staggered or if the supply was still under control, there is enough demand. But the trouble, as I said, is, these were all aeroplanes parked on the runway and all of them took at the same time. That's where the trouble is.
So is it the end for the luxury housing market in Mumbai? Experts say that developers need to make urgent changes to their strategy if the luxury housing market has to pick up. Changes which include reconfiguring the existing projects.
If somebody was to say, we don't need to do anything, I think the market will come back, market will take it, or we are fine, I think they're fooling themselves. Because clearly market is going to be good, but it is not going to be that good that the supply that is coming up is going to get absorbed so quickly. So there has to be a hard work, there has to be a thought, there has to be that reconfiguration that is happening. And I know in many of the developers' offices today on the luxury, they are looking at that reconfiguration happening so that the ticket price becomes more palatable. I wouldn't say affordable, more palatable.
The writing is on the wall. Developers need to stagger the inventory available in the open market and change their product strategies or continue to face slowing sales. From Mumbai, Nikhil Sivadas for NDTV.